This week for ASML, the bigger the orders, the bigger questions. The company reported a record-breaking surge in new bookings fueled by the seemingly unstoppable demand for artificial intelligence infrastructure. But even as orders nearly doubled what analysts expected, the stock price stumbled. This raises a key question for the market. Is ASML facing a future of limitless growth, or are there fundamental ceilings the company is about to hit? Welcome to TickerWatch News for ASML, Week 8, 2026. This episode will cover the major news and market developments for ASML, focusing on the company's recent earnings report, its strategic initiatives, and how the market is reacting to its central role in the global AI boom. Looking at the past month, ASML's shares have posted a return of over 8%, a significant outperformance compared to the S&P 500 composite, which saw a slight decline of less than 1% during the same period. The broader semiconductor equipment industry, to which ASML belongs, gained about 8.4% over the last month. The stock has been one of the most searched for on financial websites lately, suggesting high investor interest in trading activity. While the share price has shown strong upward momentum for most of the year, it experienced some volatility following the latest earnings announcement as investors weighed record demand against questions of valuation and production capacity. The overall takeaway is a stock with strong recent performance that is now consolidating those gains as the market digests a wave of new information. The biggest story is ASML's fourth quarter 2025 earnings report from late January, which revealed a record-breaking net bookings of 13.2 billion euros. This figure was almost double what Wall Street was expecting and was driven by what they call more robust expectations for AI-related demand. More than half of these bookings were for ASML's critical extreme UV lithography machines. In response to this demand, the company issued strong guidance for 2026, with expected net sales between 34 and 39 billion euros. Alongside the strong results, ASML announced a new share buyback program of up to 12 billion euros, planned to run through the end of 2028. This move signals management's confidence in future cash generation and its commitment to returning capital to shareholders. The company has already been actively buying back shares under its previous program. Another key development is ASML's deepening involvement in Europe's push for semiconductor independence. The company is supplying its most advanced tool, the high-NA UVM machine, to a new 2.5 billion euro pilot line run by research firm IMAC. This project is a central part of the Europe Chips Act, which aims to double the European Union's share of global semiconductor production by 2030. This positions ASML's technology at the heart of Europe's long-term strategic goals. Finally, in a move that contrasts with the growth narrative, ASML also announced plans to streamline its organization by cutting approximately 1,700 jobs. The company stated the move is meant to reduce complexity and improve efficiency, framing it as a decision made from a position of strength to ensure it doesn't slow down as it grows. Wall Street analysts reacted with widespread optimism following the company's results. Multiple firms upgraded their ratings or raised their price targets. Barclays upgraded the stock to overweight, and Bernstein raised its price target to over $1,900, both citing the record orders and strong AI-led demand. Similarly, RBC Capital and TD Cowen also increased their price targets, pointing to the AI-driven demand for both advanced logic and memory chips. However, the sentiment isn't universally bullish on all fronts. While growth prospects are praised, the company's valuation is a point of caution. Zacks Value Style Score gives ASML a grade of F, indicating it is trading at a premium compared to its peers. Other analyses suggest the shares are trading significantly above their estimated fair value. There are also signs of institutional investors taking profits. One notable investor, Duan Yangping, significantly reduced his holding in the company in the fourth quarter of 2025. Reports have also flagged insider selling over the past few months, which some investors interpret as a signal for caution when valuations appear stretched. The stock's price action, which saw it fall after an initial spike on the earnings news, suggests the market is balancing the massive demand against these concerns. From a technical perspective, ASML's stock remains in a strong uptrend. It recently moved above its 20-day simple moving average, a technical indicator that traders often see as a positive short-term signal. However, some momentum indicators suggest the rally may have become overextended in the near term, which could explain some of the recent volatility as the stock digests its gains. Fundamentally, the story is a tale of two parts. The growth narrative is exceptionally strong. ASML holds a near monopoly on the EUV lithography tools that are essential for manufacturing the world's most advanced chips. This positions it as a critical enabler of the AI revolution, with a large backlog providing revenue visibility. Consensus earnings estimates for the current fiscal year have been revised upwards over the past month. On the other hand, valuation is a significant risk. The company trades at a high price-to-earnings multiple of nearly 50. Key risks highlighted in reports include geopolitical tensions related to export controls, particularly to China, and potential execution delays in ramping up production of the new high-NA UV systems. While China was a large market in 2025, its share of revenue is expected to decline in 2026. Looking ahead, investors will be monitoring several key catalysts in the coming weeks and months. First are the capital expenditure plans of ASML's major customers like TSMC, Samsung, and Intel. Any announcements of increased spending on new fabrication plants would be a positive signal for future equipment orders. Second is the adoption rate of the new high-NA UV systems. Any news of new orders or successful integration into customer manufacturing lines will be watched closely, as this technology is key to ASML's long-term growth story. Third, the market will track the execution of the company's new share buyback program, as its pace can signal ongoing confidence from management. Finally, any developments regarding U.S. and Dutch export controls on semiconductor technology will remain a critical factor, as these regulations could impact future sales. The bull case hinges on AI-driven demand continuing to surpass expectations, while the bear case centers on geopolitical risks, capacity constraints, and a potential cooling in the data center spending boom. Thank you for tuning in to this week's TickerWatch News for ASML. The information provided in this podcast is for educational purposes only and is not intended as financial advice. We encourage you to subscribe to the podcast, leave a review, and share this episode with others interested in the semiconductor industry.